Joining us now is RBC's head of global commodity strategy, Helima Croft, also a CNBC contributor. Helima, how much of a production cut is priced in here?
I think at this point, market participants believe that at a minimum, OPEC is likely to roll over their existing cuts, and Saudi will likely extend its unilateral 1 million barrel production cut into 2024. I think that is really what is in play. There's some discussion right now. Could they go deeper? Could we see collectively OPEC cut more barrels? Will there be some potential countries saying, okay, alongside Saudi Arabia, we'll make some voluntary reductions as well? So I think that would be the bullish story if we see potentially more barrels coming on. I don't anticipate that Saudi Arabia is going to look to end its voluntary cut in 2024. I think the market is still too soft for that. But everyone's watching those three scenarios for Sunday.
How much downside risk is there based on, how this turns out?
I think if the Saudis came out and essentially said that 1 million barrel unilateral cut, we're going to basically sunset that. It's coming back in January. I think that is the bearish case scenario for this market. Again, that's why we expect that they will likely stay the course on the cuts that are already in the market. I think it's really a question of, do we see more cuts coming on top of what we have in the market? Some are speculating, though, that the Saudis might look to essentially try to regain market share by bringing those barrels back. That is not our base case at all for this upcoming meeting.
Okay. Now, how much risk is there in the demand slowdown? We've just been talking about supply, but during the show, we've been talking with Bank of America about how much consumer spending has been slowing down. Imagine people are going to be driving less if they're spending less.
Look, the macro data, particularly for a country like China, has been concerning. But overall, we don't see a really significant demand slowdown. There's been some softness when it looks to, China in terms of recent imports. There's some lower refinery utilization rates, but some of this softness is seasonal. We don't see the flashing red lights on oil demand right now. There have been issues about additional supply. There's been significant supply growth coming out of countries like Brazil, the United States. But fundamentally, this market does not look nearly as weak as the sell-off would indicate. We think this market is oversold. We think a lot of this has been driven by CTAs. And so it's interesting to see whether this OPEC meeting can sort of firm the floor at a minimum in terms of this sell-off.
So what's meantime happening with natural gas? Colder forecast, but is that enough?
Again, we think that there's been a correction in natural gas. We think that there's, there's enough supply out there. We will be waiting to see what happens in terms of winter. Inventory levels look solid. And so, again, we think the recent correction is warranted, but we just have to wait and see what winter brings for us.
How much is the Chinese economy factoring into how energy is behaving right now?
Again, I think that China concerns, China growth has not been the blockbuster that everyone anticipated with the end of zero COVID policies. But, China demand has been relatively solid this year. Again, we think that we are oversold based on what the actual demand numbers look like. And the other story, Don, I think that we should be thinking about is there's basically almost no geopolitical risk premium in this market. We had a run up when the war began between Israel and Hamas, but market participants have just basically decided that it's not going to expand beyond Gaza. But we think it's way too soon to write off some type of disruption from this conflict. And we just saw over the weekend, we saw the Houthis make good on their threats to target shipping. They basically hijacked an Israeli tanker in the Red Sea. And we are concerned that this conflict could still bring some disruptions to energy. We don't think that it's necessarily going to remain confined to Gaza.
The way you look at it, is that likely to happen in calendar 23 if it happens, or never know?
We do not know, but I think it's very important that Amos Hochstein, the presidential senior coordinator for energy, he is in Israel right now trying to prevent an expansion of this war to Lebanon. And so the White House continues, it seems, to take the expansion risk seriously. There's significant U.S. forces that have been deployed to the region. There are ongoing attacks on U.S. forces in the region. So again, I think it's way too soon to write off the risks from this war.